We'll have more on Mr. Trump's choices to lead the Fed from our next guest, Geoff Wood, who's the Risk Management Officer at Morphic Asset Management. He joins us live from our Sydney studio. Geoff, thanks for talking to us.
Hi, Helen. Good
now,
to be here.
the next Fed chair, I've just run through, some of the choices. Given the importance of the Fed to really global markets, it is very natural for investors to be starting to speculate very strongly because Mr. Trump has been saying, sort of imminently he will make a choice.
Correct, yeah. I mean, if we look back over the last 10 years, it's been so important, the monetary policy decisions made in the US and the twists and turns of the US stock market have reflected that to some extent. So, if there's a baton change here from a dove to a hawk, that's a pretty significant turning point.
Yeah, well, you'd have to think, I mean, Mr. Trump has also, he likes low interest rates, doesn't he? Yeah. You'd have to think he'd favour a dove. I mean, he may not like Janet Yellen, and we still don't know what the relationship is like, but you'd have to think that he will favour a dove, and that probably excludes, doesn't it, Kevin Warsh and probably John Taylor.
Exactly, I agree with that. I mean, you've got Yellen, who's the perfect continuum of the current regime. She's probably about 4 out of the 5 that you mentioned in terms of stats. But number 1 is Jerome Powell. He's the highest odds. He's probably around about 30% chance of getting this. I mean,
why do they like him? Why do the markets think he might get it?
I mean, he's an existing governor. He's aligned with Janet Yellen's thoughts. He won't rock the boat too much, but at the same time, Trump will still be able to come out and say that he's made a change in there, and therefore he can take some of the credit for a continued dovish path. And you're right, though, the press is picking up, and the market's starting to get a little bit more worried about should Trump take a Taylor approach, but ultimately, like you say, he's a property developer and would be very unlikely to go down that road.
Sorry, yeah, Mr. Trump is a property developer. Now, Kevin Warsh, he's a former governor. What is the thinking around him?
So, I mean, he really got on with Trump, and as you know, the relationships are a very important part to how Trump makes his decisions. Now, the very interesting thing with this candidate is he was out recently on the tape saying that he would be open to discussing actually moving the inflation mandate of the Fed. So,
that's right, yeah.
As you know, globally, one of the big issues we've got is all these central bankers are desperately trying to target a high inflation rate on the products and services that we buy, and it's not happening. So we've got these low rates, which some argue are too low or artificially low, and it's prompting asset prices to continually keep rising. So he's maybe a bit more pragmatic in that regard, and he would say, well, maybe we're just not going to hit 2%, and we should lower that band. So that would be seen as quite hawkish, because as soon as you lower your CPI or inflation target, it enables you to hike at a quicker rate and reduce the balance sheet at a quicker rate.
Right. Now, if a hawk goes in, that would be bad for equity markets. Wouldn't they see that as a sign that, their massive asset price inflation is not going to happen?
Exactly. I mean, the first thing you'd probably see is the sort of bond market would sell off, particularly the 5-year and less tenors, and that would be a headwind to stocks, and you'd probably see the US dollar have a knee-jerk reaction rally.
Yeah, all right. Now, as for John Taylor, he seems to be the current favourite, but I mean, he does not favour. He's been a very strong opponent to sort of loose policy, so people would expect a rate rise pretty immediately, wouldn't they? Or more rate rises.
Yes, I mean, John Taylor is famous for coming up with what's called the Taylor rule, where he's basically got a formula where you say, given unemployment's here or slack in the economy is here and inflation's here, where should interest rates roughly be? And when you put that through his calculation engine, you end up with a number significantly higher than here. Now, that doesn't really take into account the regime we're in, the higher levels of debt, etc., globalization. But people say the bias from his framework would be for higher rates, exactly.
All right. Well, now, I never thought I'd be hearing myself saying this, but Mr. Trump is possibly playing his cards pretty well in that he's applauding all of them, and the market can't sort of determine, but he at least gets some market feedback
correct.
after each choice.
Yeah, exactly. So He's sliding in the polls, so these days he continually points to the S&P making new highs and saying that that's applauding his policy. So,
Yeah.
you know, you could say he brings a candidate in, interviews them, say they're doing very well or they're impressed with him, and depending on which one gets the S&P up the most, he'll pick that one.
All right, Geoff, just on Rio, now the SEC is really, I guess, following in the footsteps of the Financial Conduct Authority in the UK. They only fined Rio, but these are very serious charges that the US SEC has made against Tom Albanese, Guy Elliott and the company.
Correct, yeah. I mean, this shows the real complexities of these big conglomerates trying to issue into multiple markets. You fall under multiple jurisdictions, you can be picked up on the same issues. So now we've got the US going after Rio in the same way that the UK did. Our base case would be if the UK ultimately didn't get them on fraud, and I believe they settled out of court, you'd probably see a similar result in the US, but yeah, it's continued headaches for those guys.
All right, Geoff Wood from Morphic Asset Management, thanks so much for joining us.
Thanks, Hannah.